In the previous video, I talked about what to invest in Malaysia now. So in this video, I'm going to talk about how to invest in Malaysia now, part 1. Go through the details of what you should do for each and every of this investment if you want to do it DIY, so I could actually pull you out from the confusion that you are in of where to start and how to start. As the only independent licensed advisor in Malaysia with the largest YouTube channel, I've been engaged by Maybank RHB and also PNB Amanah Saham to conduct investment workshop stocks. These are the few questions you want to ask: whether you only want to invest in Malaysia, which brokerage to choose, what country you want to invest. If you want to invest outside of Malaysia, then how to actually calculate the stock's intrinsic value, how to find undervalued stocks, and whether the stock that give you dividend yield is important. And then you have to know when to actually sell your stocks and what sector of in the stock market you should focus in, whether you should actually do any technical analysis or even know all those charting fundamentals, whether you should actually do a long-term value investing by doing fundamental analysis, what are the price that you should buy a stock and when to actually buy, is there a specific day or week in a month, and then what are the growth prospect of a company. These are all the questions that you should know when you want to start investing in stocks. How about the expected return? Well, it could range from losing your entire capital to making infinity amount of return in a short period of time if your stock picks are on point. Property investment says that stock investing is slow because property you can actually use leverage, but actually it's not true because in stock you can use margin financing as well, which is basically borrowing money from your broker. And you have platform like eToro that promotes social trading. It's sexy, it's fun, there's a social element into it. You can actually follow whatever other top investors are actually doing in your portfolio. A lot of people use that to trade overseas stocks. Property, you have to decide whether you want to invest in Malaysia, which states in Malaysia, what is the rental yield that's acceptable, you have to choose what is the best bank loan that you get, and then whether you want to focus on undercon property or sub-sale market. How do you want to actually negotiate the best price? Because property, it's really about negotiation, and you must know when to actually sell your property. You must know what are the best location to invest. You want to ponder whether you want to use strategy like multiple submission or loan compression. You must know how to calculate your own debt service ratio, how to actually keep your credit or secrets record clean. How about raising capital to pay for the 10% or 20% deposit, and what about saving for the renovation cost? And you also have to deal with all the property related taxes. You want to decide whether you are a property flipper, just buy sell, or you are a long-term property investor where you rent long-term for the rental income, or what is the growth prospects of a property in the area that you pick. Now, these are all the questions that you should actually know and ask before dabbling in property. Otherwise, you will actually go bankrupt by investing in property because it's highly leveraged, and this would totally ruin your life. Or you could also become a multi-millionaire with no money down. So there is a wide spectrum we are talking about over here. And when it comes to property, a lot of people that has bad experience in property, or even if they had a good experience, they have sold off their property for good gains, they would have actually want to park it into real estate investment trust or REITs, which will give them the steady income flow without the tenancy hassle. Because after all, if you start dabble in property and you had a bad experience, your property guru actually con you or cheat you, you think after you encounter ghosts, you still want to go to dark places, you are forever traumatized. Now, unit trust, you also have to know what are the fund mandate, what are the risk rating, what about rebalancing, how to do asset allocation, what is the best fund house in Malaysia or overseas, how to compare between the funds from one fund house to another. How about the sell chart? Is it very high? If yes, how can I reduce that? What are the historical performance of the fund? Which country or sector you should focus into? What is the minimum investment of the fund? How about when to switch and what to switch? I do a lump sum investment or a regular saving strategy. These are all the questions you want to consider to invest successfully in unit trust or mutual fund. Expected return, well, you could be losing your entire capital. On the worst case scenario, you could also stand to gain 20-30% per year. Because if you're a unit trust agent, it's hard to cari makan today unless you already have like an established customer base. Because they say stocks can make higher return than unit trust. Unit trust don't make money. And then the insurance agent will say that unit trust investment is very risky, so better buy saving plan. And then the robo-advisor will actually criticize unit trust because it has come with a very expensive fees. It's not really a popular option, and there's so many unit trusts that you really have to find the best of the best of the breed for you to really gain decent returns year over year. Now, how about bond? Now, bond you have to consider whether it's a Malaysian bond, what's the interest of the bond, whether you want to invest also in developed market bond or emerging market bond, whether you want to diversify into corporate bond or which government bond, bond with long duration, bond with short duration, or bond with mid duration. You have to ask what is the default risk, whether you should dabble in high yield bond or high grade bond, what's the minimum investment for retail bond or for bond fund, and you have to understand what is called the yield curve. So bond might seem like very simple, but actually it's not simple at all. You could lose your entire capital when the bond default, or you could get somewhere between like 4 to 10% every single year. Bond is like your cute little innocent kitten because nobody really criticize bonds. Not to forget ASB. Click on the upper right hand corner. I talk about ASB investing and ASB financing. There's a whole series of videos on that. Expected return 5 to 8% annually. There is no upside. Likewise, there are also no downside. Now I want you to pause this screen and understand why our clients come to us, because with so many options out there of what to invest, they are actually confused. There's so many noises out there, they don't know where to start, what I call as analysis paralysis. And as an independent advisor, we help clients figure that question out. What is the best for them at different stages of life? But yes, we do charge a fee for that, for advice. And people say that, well, if you charge a fee, is it going to be expensive? Now, let me actually ask you something. You have a $10,000 or ringgit problem. Does paying 500 getting actionable advice sound expensive to you? Now, if you have a 1 million problem, and if that is likely most retirement sustainability problem is a 1 million problem, does paying 5,000 actionable advice sounds expensive for you? I don't know, only you can decide. Before we go to the part 2 of how to invest in Malaysia successfully, I want you to give this video a like, click on subscribe, and at the same time click on the notification bell as well, so you get notified when we publish more valuable videos like this on Fairfield channel. Not to mention, if you have questions, you want to send thank yous or hate comments, you are most welcome in the comment section below.